I think market profile is the best tool to organize data so we can read markets as if we were on a trading floor. So the original market profile gives us a wealth of information here. So let's take a look at some of the things. First of all, we have the traditional open, high, low, and close. But we also are able to see where the high volume price is and where the fair value area is. The initial balance, which is roughly the first hour of trade of regular trading hours, that can be very helpful when determining momentum. An extension after that initial balance helps us read momentum. We also have what are called extremes, which are low volume areas made early in the day. Years ago, I tried to categorize all the types of profiles and came up with a dozen. But really, all we need to do is concentrate on 3 structures, and we'll go over those right now. Here are the most common structures we see on a daily basis. They're directional profiles. You often see a high or a low made in the first hour of trade. You get an extension after that first hour, and you tend to see a close either below on a down day, the high volume price, or above the high volume price on an up day. The next type of profile we're going to cover is called a neutral day. And these are common when trends end and just before they begin. You get these neutral type profiles, and normally you'll see an extension above or below the high volume price, or above the initial balance. That tells you that a market has shifted to neutral. You'll see these short, wide bell curves. That also depicts neutrality. And you see an entire day's range trade in the first hour. Also, you tend to see a lot of closes right on or near the high volume prices. The last type of profile we're going to cover is called a breakout or trend type profile. And these are common after a succession of neutral days. When a market shifts into neutral, we want to start looking for these types of structures where they have below average first hour ranges. And then all of a sudden they break free and leave single prints. I call them sprints as they move on to discover or develop new value areas. These low volume zones not only are good support or resistance when you revisit them, but they also tell us that a market has broken into a trend. I don't think it's important that you have market profile, but I do think it's important that you understand the logic. So this is my worksheet that I use here, and it's not market profile. These are 30-minute bars, but I do watch all the pertinent information. The value areas are these shaded boxes. The yellow shaded area is that initial balance that I was talking about. Here you see the mini S&P had a neutral day right before it broke into a trend down. And also I'd like to point out that here you had those single prints. Remember I was telling you about those. Those are when it came back and revisited, that was outstanding resistance before our market broke free again. In this sample we're looking at the 10-year note future, and I just want to point out you've got a nice neutral profile right before the market busted into a trend again. In this last sample we're looking at crude oil, and what I'd like to point out here is before this market bottomed out, we saw a couple neutral days in a row before we saw a trend day where it left those single prints, that sprint area behind, and then when it got up on the top we also saw another neutral day before it busted into a trend move down. So I think it's really important to be aware of what type of profile is developing that can help us with timing for longer term trades.